Hello, hello, hello. How is everyone doing this Sunday afternoon? Hope you do like that new intro. By the way, one of our community members and supporters of this channel, Ken, who you see in the chat, made that. So big shout out when you see him next time and congratulate him on that wonderful intro. By the way, if you are new here, please do consider subscribing, hitting that like button, and ringing that bell. Longer term members, thank you for the comments. Please continue with the comments and hitting that like button. So, Abraham, glad to see you here. Oil prices may be the best indicator of where the markets will go. Yeah, we're expecting some major volatility, major volatility. So we have to prepare ourselves. Thanks, liking the new intro. Yeah, that's great. Again, thanks to Ken. Welcome, Jake the Snake. Welcome, Tesla Force. Lots of things. It's going moment by moment. Just to touch in what Abraham said with oil. Uh, Oil and commodity traders, there's a lot of stuff flying around, but a lot of that's going to be cut off from Russia until there's more clarity. Lots of stuff going on this afternoon. It's going to get probably very, very volatile this week, so keep that in mind. Uh, Let's see. And here's Ken. Ken, who created that wonderful new intro. Thank you. One of the bigger YouTubers put out a video saying a potential bottom is in, and his top three stocks were Palantir, PayPal, and Tesla. I find it funny he's so confident the market will only go up from here. Uh, if the bottom was in, that is great. I mean, as I said last week, we have a major another long-term sell signal. Last time that triggered was 2008 by a system I follow. It was not developed by me, but it is one that I follow. So there is a lot of downward pressure in the markets, and you will still get these rip your face off rallies. And I talk about the macro trumping the micro. Like I've talked about that with Tesla. Like the macro, if the Nasdaq's selling hard, it's even going to hit Tesla harder and other stocks harder. You mean even if you have a stock in great bullish play, you get some macro stuff going on with the markets. Well, that's going to hit. And what I meant by macro that at that point was selling pressure in the S&P or buying pressure in the S&P, buying pressure in the Nasdaq, selling pressure in the Nasdaq. That's going to trump an individual stock. Now we have the macro of the macro, which we've been leading up to, but things can change in a moment with what's going on in the world and the Russia-Ukraine situation. But it looks like there's going to be a ton of pressures on commodities. Things can be volatile. We're still going to analyze both the upside and the downside. I might need to do another live stream in a couple hours once the market opens to help fine tune. I will try to get one out tomorrow morning. Again, I thank you everybody who follows these and stays involved with the channel. But oil, not only oil, but other commodities will be impacted with this. Russia getting essentially kicked out of the SWIFT banking transaction system, not making them happy. The EU stepping up more and more, lots of support coming for Ukraine. So we will just see what happens. But you know what? If I was looking at the bottom, my top three stocks would not be Palantir, PayPal, and Tesla. Okay, that's just sort of ridiculous. There's other great plays. And if you also think about it, I posted a bit ago, and you can watch it after that, my stock sector overview, which helps you identify which stock sectors to look at. Consumer discretionary, which also does hit. I mean, people need automobiles, but they don't necessarily need high-end automobiles. Consumer staples is very, very strong. And we still have a very highly inflationary environment, and this is adding to it even more. So there's going to be even more inflationary pressure. So the Fed just can't say we're going to come out, leave rates like it's zero, because inflation could really run rampant, and that could really cause the markets and people in this country major turmoil. Now, if things really deteriorate with Russia, that will even trump that. Hello, Christoph. I hope you're well. The mood in Europe is really dark. I can tell you. Thank you for that feedback. I've been back and forth with people, and that's the same thing I have. I am in the States. In case anybody doesn't know, I'm outside of Chicago. But I am getting that sense that the mood is very dark. We have even talked, that nuke talk is heating back up, which is never a good thing. So it's just a very volatile situation, and it will impact the markets, and headlines moment to moment can really impact it. My advice to people is, if manage your portfolio, know where your stops are, and don't just disregard the stops. Also, be very careful. I'm tired of tying into other YouTubers that I've been doing this since '92, not the YouTube thing, but the investment and trading thing. Be very careful if people say, if the markets start dropping again, just keep buying on the way down, just keep averaging down. I went on a huge rant on that, I think, on Friday. You should probably just watch that video if you want my thoughts on that. But a lot of people in this kind of volatile situation can really do damage, if not completely blow up their entire portfolio, which I really don't want to see. That's one of the reasons I'm spending time on a Sunday afternoon. And again, we do this every Sunday. This is not just out of the blue because of the situation in Europe right now and with Russia. This is something we need to do to prepare ourselves, period. I've been warning at this. How long has it been? I know we have longer term people watching this right now, but I was talking about the deteriorating breadth and everything else. So start watching for the bigger sell off, even last fall. Why? Because technical analysis, which is what we do here, uh, gives you warning signs and gives you heads up on things can get worse. Now, what people say is the market's selling off due to this, the market's rallying due to this. We talked even last week. We had a strong rally Thursday and Friday, which you see over here. And, I was watching with the end, we were oversold, end of month rebalancing, going into some window dressing and everything else. But now, even with that, I know the end of the month is tomorrow. The macro headlines will even trump that. And longer term, I am still bearish, watching for this to roll over. Now, what people say is, if we gap down and the selling continues tomorrow, there's going to be some interesting stuff going on in the credit markets tonight. People say, well, it's due to the Russia situation. Well, why I tied this into warning signs from the fall is because it's always going to be blamed on something. The what was already present. The what was the markets were deteriorating. The market internals were deteriorating. We were watching for topping patterns. We've got some major sell signals. And people always say, well, now the sell is because of Russia. No, it was already in place. People are just going to attribute it if we go tomorrow. And it is due to Russia, but it's already in place. Okay. It's already in place. We shouldn't be expecting, we shouldn't be, all new time highs, new all time highs, whatever. I always mix up that phrase. And if people say the rallies do this, the sell-offs do this. Well, longer term, we have a lot of selling pressure. We have a lot of long-term sell systems that have triggered. So I'm watching for further downside price action, and we still will get these rip your face off rallies. Let's see who else is here. Ted, happy Sunday. That was beautiful rant. So true. And young traders really need to hear it. Well, thanks. He's referring to the rant on Friday. I go on these rants sometime where they're not planned. I just go off on stuff. Generally, it's related to trading and trading advice that people need to hear. And I try to get into that. Ruble futures begin trading in a few hours. I'll be watching the RSX in the morning. Yeah, rubles are already in the interbank stuff that they're getting destroyed. I've already been looking at the interbank stuff. Now the formal FX trading starts actually very shortly. So it's going to be interesting. The ruble's going to get probably just destroyed. So we are going to have to see with that. And again, the credit markets are going to get interesting. That's why I'm watching for downside price action. But these markets can be insane. So again, we have to prepare for downside and upside. I do appreciate all the comments. So if you have more stuff or you see something, well, especially when I'm doing this live stream, from a credible source, don't just put up blind rumors from some anonymous Twitter feed or some crazy YouTube channel that's not verifiable. If you find something that you consider verifiable and interesting during this live stream, please put it up there. Hold on one second. I need to fix something really quick so we don't get interrupted. All right. Again, I really do appreciate everyone being here overall. Let's see. Why is that just not working? My second camera. There we go. There we go. Had a little issue there. So S&P here. S&P, you see, again, strong rally from Thursday, Friday. I'm just going to update the macro levels. We're not going to spend a lot of time recapping the price action right now. But if we do rally, we are back into the rotation zone. Remember, and from the sell-off, let me expand it here. We had this double, or we had that little double. We sold off even below the targets for that. Now we do the harmonic retracements. Again, if you're new here, we don't use fibs. We use harmonics. They test out better. Everything I do has to be tested out. And harmonics are 12.5% increments. So just showing you exactly what I use. You can see the 12.5% increments here. So you can set up your charts the same way. Area I watch for a potential major rollover is between the 50 and the 62.5. We're right in that window right now. We also use a concept called rotation zones, which is the sort of the maximum. If we are going to roll over, it should happen before the very top of this on a closing basis, not on an intraday basis. The projection harmonics coming at the top of the rotation zone about 40, 44.18, 44.20 area. So on a rally back up through the 62.5, that would be my first target. And the 200 is right at the next harmonic, 44.55. The key level I'll be watching for on a closing basis if we do rally is this 62.5% retracement, roughly 44.04, 44.05 area. Closing back below that would be a rollover. A close above that, then I continue to watch for higher price action. And you might wonder, well, if you're bearish, why are you analyzing the upside? Because crazy things can happen in these markets, and you have to be prepared for crazy things. And you're better to do your analysis before the markets open. And again, the future's open for in another 1 hour 45 minutes. So I'm preparing both my upside and the downside right now, and then I will be able to fine tune that. I hope that does make sense to everyone. Great video. I've never seen you before. I was looking for somebody talking live about all of this. I'm a former stockbroker and day trader for over 25 years. Good job. Well, thank you, David. I really do appreciate that. I've been, again, doing this since 92. And I'm an ex-market maker, options market maker. I've traded New York, Switzerland, Chicago, Vancouver. I've traded all over the place. So now I don't go to the floors anymore, but I'm still located in a suburb just north of Chicago, just off the lake. That gives a little bit of background for me. And I appreciate, again, keep the comments coming. The whole point of this channel is to really help people. First area I'll be watching back, and it just so happens we have a significant level here. Let me remove this one. I don't think we need the super minor support level, would be about 43.70. I don't think if we gap down, that's not going to come into play. We could gap down pretty substantially. So any levels I list on the downside, if we gap below there, they're the levels I will be watching back for resistance on any rallies. So you see here that 50% level I talked about before, 43.44, 43.45 is also a significant level, and also prior resistance. We look at wicks, but candle bodies are more important for support and resistance. Keep that in mind. For example, you see the candle bodies here that are very key, and then it's confirmed by this spike high, and then it moves through. So this is your first area of support. We gap below it, it's your first area of resistance. Let's just go off 43.45. The next area, we don't need this anymore. By the way, that's a longer term trend line. Let me remove that now because we went below it. I have to reposition this to the new defining point, since that is a verified defining point. If you want to know about how we do trend lines, I have a video series up. It's 3 parts on how we draw our trend lines. It's an intro course, so everyone here could draw them exactly the same. The next key area I'd be watching is 42.86. Again, open below that, that's resistance. Open above it, it is support. Also, why that's critical with the rotation zone, that's our 4-hour rotation zone. So that's the 37.5% harmonic. We have a prior significant level there, and we have the rotation zone right there. That's going to be very key. We open below that, then it's uh-oh. Because what's interesting, you have this little minor support ledge right here. All right. Again, watch your candle bodies, then confirm it with lows. Candle bodies confirmed with lows. So I would be going off of about 42.55. And then below that, we have on the 4-hour time frame, we have a clear path move, which means there's no real stopping points. You notice down here, let me do a little recap because I know there's going to be new people watching this today. So when it sold off, you see there were no real pausing points, no real stopping points on this sell-off. Well, when we're trading back into that, there's no real pausing points until you got to the breakdown zone, which was here where you got your first pause. Then it got above there, and the next major area was up here in this resistance. However, we start trading back below this level. We're back into a clear path move to the downside, and you don't have major support until about 41.25 area, and then we have the trend line with the defining point at 4,100. So if we really start tanking, 41.25 to 4,100 is my major support. Down below that, this is where it gets interesting. Let me take off. We don't have a strong cluster here, but my next key level would be 40.69, which if you look to the left, we're tracing it over to the left, is right. We have some prior reactionary reversal there and here. Below that, then my next support zone, which I'd fine tune with intraday price action, would be 4,013 to 40.37. And by the way, I'm mapping out these other lower price actions. You see 39.77, 38.38, and these aren't just for tomorrow. These are for longer term. 37.03. I went over this in a prior live stream about this big head and shoulders patterns with those downside price targets. So those are going to be major to the downside. So that's about everything. By the way, just in case we did have some massive rally for some reason above this harmonic in the 200, the next area I would be watching for a minor resistance would be 4,500. Why? It's the 50 period. You see pausing there, just getting above it, but then reversing. And this is an area, and this so happens to be with the round number, which so many people target. So that's where that looks. I'm just peeking at the weekly since it's the start of the week. And you see, even on the weekly basis, a rally up into this area is the first cross of the rotation zone. We don't trade crosses. We're not that silly here. But what it does is it keeps us on the right side. And on a weekly basis, if we did rally, that would be where I'd start watching for a rotation back down. By the way, I sort of forgot to go over at the beginning because I sort of got sidetracked in my own mind. Here's what's coming up tomorrow. Now, the macro Russia situation, and if other stuff pops up with China and Taiwan, or you have North Korea test firing some more missiles, that kind of stuff's going to trump even what's going on with some of these reports. Tomorrow we have the Chicago PMI minor. Tuesday, we have ISM manufacturing and final manufacturing. We'll look at these each night. Remember, I do a live stream each night. I actually do more than one. I just want to give you the overview. That's what I'll be keeping an eye on Tuesday. Wednesday, I'm looking at non-farm employment. Bullard is speaking again. That will give some more insight. So we don't have any Fed speakers unless something's unscheduled, but Bullard can clarify stuff on Wednesday. We got Powell's testimony. And we have oil, and everything's going to be keying off of oil still. Thursday, we have unemployment claims, more Powell testimony, and ISM services PMI. So besides the big macro environment, lots going on this week, especially starting Wednesday. And then Friday, we have non-farm payroll, unemployment, and hourly earnings. So do keep that in mind. By the way, FedWatch tool from Friday. This will probably change drastically this week, so we will keep an eye on that. Other than, before I get to the NASDAQ, earnings. Now, these are going to be secondary, but they will still move some stocks tomorrow before the open. Not much I'm looking at. But if there's anybody, you have Berkshire Hathaway, I will glance at that. But after the close, definitely check out Lucid and Zoom. Those are major. I will check in on HP. Tuesday, Target's going to be a big one. before the market. I'll have to check out Domino's Pizza because I worked there during my college years to go through Northwestern University. SoFi after the close, well, of course, check on AMC, Plug Power. A lot of this is crap that a lot of newer traders follow and still are trying to catch bottoms in. Let's see what else. Dollar Tree definitely looking to see if they have any insight on the consumer on Wednesday before the open. And I know a lot of people trading like SoFi's and AMC's aren't interested in Dollar Tree, but if you want to hear what some of these companies like a Dollar Tree and a Target has to say about the consumer with what is going on and what they say about inflation and passing it on to the consumer. After the close on Wednesday, I'll have to look at Snowflake just because so many newer people follow it, but there's nothing for me to do there. Thursday, Best Buy again for the consumer aspect. I'll want to hear Kroger with inflation and food inflation. That's my majors. Costco after the close on Thursday is going to be another big one that hits the huge big box retailer with inflation and consumer. So there's lots of stuff Friday, not much going on for me. So there is a lot of, this is just a crazy week, separate again from Russia and Ukraine. This is a crazy week with a lot of interesting earnings. A lot of takes will come out on inflation, and we have again the Powell testimony and Fed speakers. All right, let's see. Another interesting week ahead for the markets. Can't wait to see the price action. A lot of people won't want to see the price action, I don't think. Oh boy. NASDAQ, again, the key area on a continued rally. Look at let me bump these harmonics up. Just ending just short of that harmonic. By the way, if you want to know how we do harmonics, I'm not going to go into it big now, but I've been going into that more and more with to help people understand how we do them. My major area though I'm watching is this 62.5, 44, 14,422 with the rotation zone. Now minor, I'd be watching 14,342. Then I'd be watching actually that 14,422 to about 14,500. This harmonic coming in right at 14,500. Above there would be 14,600. So those are the targets to the upside. More important, let us focus to the downside. Again, got to move this out of the way. To the downside. Again, everything I list off as potential support becomes resistance if we open below it. My first area is we're watching this 13,965 area, bottom of the 1 hour rotation zone and this prior significant level. So that's first key support. We open below that. My next key area is 13,772. Okay, 13,772, which would also be below the 4 hour rotation zone. You have minor coming in at about 13,861. So between those two levels, if we did open right around there, I'd watch for a potential rotation back up. However, you break down through 13,772. Just going to fine tune this level. And it's roughly about 13,600 and the 25% harmonic. Right in here, you see right in this area, that's your next key. Below that, this is almost an advanced clear path, and the longer term targets for it would be the breakout zone, 13,194, so I just go to 13,200. And then you have this major where we have that double bottom reversal pattern into this advanced clear path, and you can see when you go in these clear path moves, okay, there's not a lot that can stop it, and that's true here. It's almost an advanced clear path. You got this one little stopping area in there, but you could easily return to the lows very, very fast. All right, and that low area, I'd be watching 13,194, as I said. Then we're down to 13,028, so 13,000 below that. The minor levels, let me see here. Let me make sure I have to update these and bring them back to that last major point. I'd be going off 12,746, then cluster area 12,467 to 12,558. Below that, I have 12,090, so 12,100. Let's just check in on the weekly. On the weekly, again, that rally, look at that 14.6 is where the rotation zone is on the weekly. So that's where I would be paying attention if it did rally. Still not expecting it, but we are prepared. And remember, we also have the flat 50 coming in there. So there's lots of overhead resistance there, even if we did rally. Sorry about the dogs barking in the background. For those who don't know, I have 5 rescue dogs, and sometimes they do bark. Let's see, Dow, same difference here. I'm going to keep this one a little quicker. 34,400, 62.5% harmonic, top of the daily rotation zone. If we did get through there, the next major area would be the 75% harmonic, the flat 200, and the 50 coming in anywhere from about 34,870 to 34,930. So those are the key upside targets to the down, and I have to do these also. Let's just see what our harmonics. Not really giving us so much information. I just watched 34,267 as a minor level. And if we did get above the 34,400 area, the 34,500 is a harmonic, and that would be the minor resistance area. Looking at the shorter term for the downside moves, let me actually move another line out of the way. I like to update. This is the new defining point that was confirmed on Friday. So now I have to move that to the downside. Let me see here with the larger levels. I'm still keying off of this. We got the flat 50 on the 4-hour, 33,734 with a significant level. Then I'm really not I'm ignoring that. Then I'm back down to this other significant level, 33,400 with the first cross of the rotation zone. So that would be a support zone. Below that, actually a harmonic, and this resistance path becoming support would be 33,060. Minor then would be 32,809. And then there's nothing. See, clear path move. Clear path move. So we get into that clear path move. I'm targeting the lows, 32,180, 32,200. Let me just update these. Let me see here. Let me see. We have to update these now to the more significant levels. So below this 32,200 area, 31,719 to 31,584, then 31,271, then 31,000 are all the key levels. Let me see. As conflict is widening with major military equipment support from the West, China will have to take a side. Yeah. So I completely agree with you. It'll be interesting. Thank you, Bob. Thank you. I'm glad. Welcome. And by the way, again, anybody who's new here, please, if you want to know when I do go live and you want to see what we do, this is just information to help people manage their portfolio. Please do consider subscribing. Russell can't get bullish until it gets above this 2104 area. Then we'd have a double bottom. It's still a potential, so there's nothing to do to the upside. But my first target above there would be, before that hits, would be 2082. Closing pretty much at a significant level. Rotation zone's gone flat, and we are in a consolidation pattern. To the downside, my first level of support now is about 1986. Then I'm going back to 1926, and then it would be a retest of this low price range right around this 1892. Don't have to spend much more time with the Russell crude, which, you know, if you watch my sector overview and you watch the XLE, we are in bullish mode. Crude on the daily, really nicely pulling back into the daily rotation zone and holding. We had some severe volatility in here, and that volatility is going to continue in crude, but also XLE has been in major buy mode since the 30th of November of 20. Okay. Here's your key targets to the upside, though, for crude. Again, we have a rotation back up. The minor... Oh, sorry, that's not crude. That's XLE. I went through that in the other video. Here is your crude holding the rotation zone. Remember, watch it on the closing basis. So the only way I'd watch for a bigger pullback again in crude is if you get a close below 90. A close below 90, still in bullish mode, but as I said, with trading around core position, then I'd watch for a return to this major support area right in here with the rising rotation zone. And when I talk about trading core position, this is a partial add. That would be a full add. And just because that doesn't mean you keep adding on the way down. If something weird happened with crude and it tanked, then it would be a stop out below the weekly rotation zone. But you can trade around a core position with a couple adds. Now, you see we spiked up to these this cluster right up here and then reversed lower. At this point, I have to update the rotation zones area up here. We're going because we had the bigger pullback area. So my key area I'm watching is 95.80. You see here, that's the 12.5% harmonic that went through, and now that is resistance as confirmed with Friday's high. All right, so that's the harmonic, and this is one of the reasons I use harmonics. They work so well. So that's my first area of resistance. Through that, since we will have to watch crude with these minor levels, what's interesting, you get above that, you're into this minor clear path move. So there's no stopping points really until you get to those highs back from the 24th of February. You can see here, even on the 1 hour, there's nothing above here. So that would be and this would be an advanced clear path move. And the breakdown zone is right here and right around 99.40, and the top is 99.72 to 100. So those, I'd just be watching 99.72 to 100. Above there, and here's where the harmonic extensions come in really handy. Minor 102.87, major 105.30. Then we're at 108.90 to 110.07. So now we have upside targets, and these levels can be used to take some profits and or especially move trailing stops. Since we are very bullish on this, this is move to trailing stop. Okay? So key first support, Friday's low right at the rotation zone, 90 bucks. If we did drop below that, my next support is 86.20 area with the rising 50 and just in front of this prior major resistance becoming support area. Let's see. Options 22. I did get your email, options 22. I'm going to be putting some stuff in a video for that. That was a great email you put together, and I'm going to be putting it in a video, and I will reach out to you personally also. But I want to share you asked some good questions, so I want to share that with other people. Okay, so stay tuned. I just didn't have a chance. I've been very busy this weekend with everything going on. Mike, can you do a retracement analysis chart on the IXIC NAS from low to high? 16,212. What starting point you use for low? March 2009, March 2020. Which one is correct using month intervals? I will take a look at that, and you are very welcome. Again, these are the points. You can always reach out to me via email. You can, we also resurrecting the Twitter account even more, path_trading. We've had in place an Instagram account where more and more short information will be going up. Here's your IXIC. My major, the harmonics you can see here. This is based off the daily. I know you asked about the monthly. My last major harmonic low was from March of 20, the COVID reversal. And you see here how this is why we love them. Look, first pullback area, 12.5%. Pausing there. It actually sliced through the 25 initially, but then you had some resistance, and then it became some brief support until tanking to the 37.5. And people will say, well, there's a fib area right around there too. Yeah, but the 37.5 tests out better than the fib level. So this is where, and then on the next key level would be 11,398. Now on a long-term basis, where would I be using? The last major correction was here. Now here's what's interesting on this monthly basis. This was the last major correction. Okay, but and look at this. You have a cluster now. And I'll do another video on this. I'm just showing people. We have a cluster area right here, which is this low from the U.S. Composite Index, okay, from this key low. So about 12,500, which we to 12,600, which we just bounced off. If we get through there, again, that minor is 11,400. Major then area, and I'd fine tune this with some harmonic projections, would be 10,600 to 10,200. Now, from that bigger correction area, we have right around 8,700 to 9,000 would be another huge area to watch for. Again, this is longer term. I'm not referring to anything going on this week, but I'm expecting some of these lower areas to be hit. So those are the key levels, and then you want to look for these cluster areas. Okay, but even if, let's say you went to here, let's say you chose this, it's not going to change your levels that much. These are key, look, same pretty much areas that you're watching. Again, you're not trying to hit a higher low. You can fine tune that with the more recent price action. You're trying to find a bigger picture. So I hope that helps. Let me know if that somewhat answers your question. Options 22. Gold, which we could definitely see some more upside pressure in. Remember though, see, you're still getting these volatility moves until we get out of this major horizontal congestion, which I start needing a key close above 1960. At this point, I want the key close above 1980. You start getting close above there. Quick run to 2000 to about 2020. Harmonic retracement there and projection key there. I have to update these levels. These are my minor levels. Oops, let me update. I already have, that's not going to give me much more information. 2053 would be the next target. Then it would be to the most recent highs. But I'm not opposed to taking profits in here because we are still in consolidation and congestion. And you see, even with the price action, we broke out of the short-term key levels, especially above 1876, running up here, but we had a strong reversal back down. So this is why it's always great to lock in some profits and or move up a stop, because I would be looking to get back long. We're long-term gold bulls in this. Silver, I've already updated the major levels here. So we make a run back above 2471. Minor level I'm watching is 2505. Then I'm pretty much going back. Sorry, I didn't update this to the most recent high. It's roughly the same area, though. You see now you have a cluster right there. 25.75, 26.23, 26.77. But even those levels keep you in major consolidation. By the way, I am still longer term, more bullish silver than gold. Shorter term, people will tend to favor gold, but longer term, the gold-silver ratio favors more substantial long-term run in silver. So keep that in mind for positioning your precious metals portfolio. Notes. We are going to see volatility. Remember, we came up here with this horribly sloppy double bottom, which was never closed above. This was a close right at it. Against the rotation zone, when they're against the rotation zone, they are slightly lower probabilities, and you can see why. Running up could not close even to trigger it, and closing below the rotation zone, another spike up, really close to that first target and the prior support becoming resistance area, and then rotating back down. Now, it's going to be very interesting because even with this, the bullish moves on Thursday, Friday, we had yields. Let me jump over to the yields. Yields on your 10-year were rising back up. Now, it's going to be interesting because if there's another flight to safety based off what's going on in the Ukraine-Russia situation, you can easily see yields go lower even with this inflationary environment. And you also see here are the yields. Look at those harmonics. And this is why you don't want to move them right away. Sometimes I'll leave them on the chart for people to understand this. Look, we had 204. 2043, look, could not get really a close above that level. You can see the resistance there pulling back, and look at this. You had the minor level, which we paused at, through there to the major level, coming back, and look at this on the closing basis at that minor level. That's why these things are so wonderful. Now, we do have this little double topping pattern, which is confirmed but never triggered. But here's the yield levels. If there's another flight to safety, which means people will be buying those notes, which will cause the notes to rally in price and yields to potentially come down again, so that would be 182, 178.5, then 174.5, and 174 is this major support area. Well, I'll probably take a look at the yield curve later. There's not much more information I can go on there, but again, sorry, back to my main watch list. My mind's moving a mile a minute with everything going on. So you rotate back down, you come back down. My support would be right around 125.20, and that would be then a triple bottom, which favors a continuation pattern. And those levels would be 125.04, 124.23 to the downside. On that rally, should it be a excuse me, should it be a flight to safety? Again, the minor resistance right now is 126.25.5, but then we get a close above there. I'm going to 127.14, 127.24, and then 128 to 128.01.5. Dollar index, we will definitely see some movement in this. Let me update our harmonics. You can see could not get above that first level, but we do have a pullback here. I'm actually going to go with the most recent swing now. The most recent swing would be to this key low. That's the one you want to use. This was in consolidation. I just watched your minor resistance is right here now. Your minor resistance is right around 97.25. Then I watch for return to this 97.73, 98.125, 98.515. So that's where we stand again. Commodities, go watch my overview. But even with this pullback, I'm watching for another push higher. I do have to check in on grains because we had this pullback like everybody thought it was over. I'm still very, very bullish on grains. Corn back to the daily rotation zone just ahead of this prior resistance becoming support. So I'm watching for another rotation back up in corn. Soybeans into the rotation zone again, so I'm watching for a rotation back up. And wheat, especially, that's one I'm going to be probably the most bullish on. You can see the reaction at that 935.60 area. Could not get a close above that and moving back just below this prior resistance becoming support, but I'm going to watch for another return back up in wheat. What else would we like to look at? What else? We should check in on the crypto market. Crypto, I'm still longer term, even with everything going on with Ukraine, Russia. I am still bearish on this. The key resistance now is 41,200, and then we're at 45,152 on any rallies. That's off the weekly. We did rally back up, had this double top, which came down here to full targets, back to the daily rotation zone and rotating back down, sitting against support right now. I'm just going to bump this down. So if we start breaking below about 3,700, I'm watching for a return to 35,000 and then 33,000. Below 33,000, we have a harmonic level, 31.5, and then the next major target's 30,270. Let's see where we sit. You know, of course, Tesla Force wants Tesla. I'll just do the upside and downside. Upside, we have, you're going to be watching the 40. Oh, sorry. What was I? I clicked on the wrong thing. I'm like, that's not right. Tesla's not there. Let me pull this. Let me see here. I'm going to pull this longer term level off. Tesla, your nice little pausing area on Friday, your key resistance area, I can bump up these levels right now. These are the minor levels, but you see your harmonic coming in right with the declining rotation zone, the flat 200 and a harmonic. So 832 is your resistance. Then minor 849, but my major level is about 861. And then top of the daily rotation zone, 881 would be the key levels I would be watching. For support, and, you know, as goes the market, so will Tesla. And you have all that SEC rumblings with Tesla, even with Elon's supposed donation with Starlink stuff. And don't ask me my thoughts on that. 795 would be first level support. Again, if you gap below that, that becomes resistance, and you're into a clear path move down to 755 area. Okay, then what's interesting is below that, you have another single candle clear path move. Even on the 15, it's a clear path move. So there's not much support back down to 700 again, should you start breaking below 755. So if you start breaking below 755, watch out below. Now remember, your daily is still in bearish mode. Weekly's in bearish mode. Even on a strong Tesla rally, which would shock me, but you have to be prepared. Major resistance is now at 896 to 900. For those new here, we had a major weekly sell signal back at the end of January. It finally hit the first target, the 728.65, but it has two targets to go. Next major one is 649.91, so 650. All right. So still long-term very bearish on Tesla, so you can slam me later. What else do we have? I'll see. Really? W browser, hold on. 1 million monthly sunflower crush is down in Ukraine. Very bullish oil seeds and veg oils particularly. Thank you for that information. That is excellent information. And again, if commodities and ags are going to go still, they are in strong bullish mode based off the whole commodity sector. The ag sector is in strong bullish mode. So those are just buys on dips until something changes. Can I do an analysis of ZL second continuation? ZL second continuation, sure. And I am not I used to, well, I was, used to do a lot with beans and a little with oil, but I have not done a lot with oil recently, but pulling back into your daily rotation zone. Again, I'd be watching for a rotation back up. Let me take a look at that bigger picture here. Oh, this is, this topping thing here, but this, I think that can get wiped out pretty quickly. Again, sitting at this prior long-term base. This was a long-term base forming and then pushing on up. So I'd be watching again, especially above about 68, 68.50, 68.30. I'd be watching for another run to the highs. Interesting enough, right here, we're back into the daily rotation zone. Even if it pulled back a little more for some reason, which not expecting, but again, remember to do all your analysis. Let me just look here. That's roughly an area. I'm just seeing if I can fine tune this a little better. That's a little more significant right there in the past. I'd be watching though, since this is lining up with this resistance really on a pullback 66.20, then major support about 65.50. Let's do our projections because I am expecting this to go higher. And again, we want to use the harmonics. If you're new here, here are the harmonics levels. It's 0.125 and 0.25, 12.5 and 25%. That gives us 76.82 minor, 79.68 as major. Again, you want to do some of your longer term levels. It would be first off to there, and those are still easily in play. I would not update this because that gives us 75.98 to about 76.82. I'd still use that as a first major target area on a move up. Where did that retrace to, by the way? Seeing where that retraced to, 53. That was just 37.5% retracement right there. That's pretty nice. All right, that's your longer term. Those are the price levels. If you get that bigger pullback on the weekly, your major support, remember we watched between the 50 and the 62.5 with the weekly rotation zone. And just behind that 50 level is this little support shelf or resistance shelf becoming support. Look at that right at the daily, bottom of the daily. So if something did happen, you got a bigger pullback, that could be a potential long-term rotation back up by level. CHD. back to the daily rotation zone. I'm actually watching for still a bigger pullback in this, but that would be a daily rotation zone and sitting against this key resistance. If you do start getting a move above there, you're into this really sloppy clear path with the next target being about 101. 101.55. You can see here your events against this major resistance right here. And the rotation zone. So if you break through there, you start getting some momentum. My next target would be about 101.55. You can see it's the end of this clear path right in here, and this prior support zone becoming resistance. Minor levels, you're going to use your harmonics. Since you're into a clear path, that's a great area to use the harmonics for minor levels. So 99.62 stop raise, 124 could be another stop raise. And it looks like you still have a little minor gap left behind. On a pullback area, my first area of support would be about 96. So you had resistance, confirmed support with the low there. Could not get a close below that level right here and rotated back up. You had that gap below it, but then a strong move through it. So I'd be watching 96.04. You get below 96.04, you're going to go to the 94 area. And then below 94, 92.50 essentially, and 91.12. But you get down there, I'd just be watching for that longer term support right around that flat 200. So, what's you really want? Is that a reference to your Vans sneaker stuff? So, see, I can't do Vans. How do we do Vans? We can't do Vans. I think that was some humor from W Browser, or a web browser for the full name. Do you ever look at Elliott waves in your technical analysis? Do you have an opinion on them? I use very simple forms. I use the 5-wave impulse, the 3-wave corrective patterns. I generally don't do it in this channel because I've put a few things in there, but it's more esoteric for people. And I'm just trying to get them, and people are already confused enough with the harmonic extensions and everything else. And I use different ratios than most people for my Elliott wave stuff. I'll probably do some more advanced topics on that. But generally, it's just the 5 waves. But see, once you get into overlapping waves and diagonal patterns and everything else, I already get too many things. I'm confused by what you do now. If I start throwing that in, I don't want to completely lose viewers. But if there's something you'd ever like me to look at, we can do that. Anything else? Anything else before we wrap this up? Again, watch. I might do another quick live stream in about just over an hour once the futures open, just to re-gauge stuff. But I always like to do this market prep. People might be wondering, well, why didn't you just do your live stream once the futures open? Because I'd rather do it before they open, because then I'm prepared for trading them at open. Okay? If I do my analysis when they're opening, I'm going to be influenced by the opening, and then it's going to influence my upside and downside analysis. You're better to do analysis with all your targets and your stop levels and all your support and resistance levels before the market is trading, or before you even get into that trade. All right? Because once you're in a trade, or once you're thinking of putting on your trade, the trade that you're in or the trade you're thinking of putting on can definitely influence your levels, and they will not necessarily be as good. So we can look at some stuff longer term. Lily Weekly. And by the way, if you do want to contribute to the channel, by the way, this is a great chart here. If you do want to contribute to the channel, there are Patreon, there's Buy Me a Coffee, and there are Super Chats. So keep that in mind. Again, we can't trade this as a double bottom because it's technically a triple that reversed off. let me just look at this weekly. Now, it came down to that 50 week, which is pretty key, and back up here. You can actually trade it on a weekly basis. That is still a double. So we can use that targets based off the weekly. It has confirmed, but not technically triggered yet. But so I'd use these as shorter term targets. And why I'd still use these as shorter term targets, because you still have a valid double on the weekly against that 50. So you start getting a move above 25, 251.88. Look at this. You're into what we call an advanced clear path move. There's still a gap fill behind, and there's your first target, 261.47. And look at that. Your gap fill is technically to the close here, but that would nearly be the gap fill to the opening price. So that is a wonderful first target. And again, you're into an advanced clear path move. If you wanted a minor target, your minor target would be 258.19. Now you get above this area right in here with that first target. You're into another clear path move. So 266.27, 271.07, and you do have some gaps behind. You get above there. I'd be targeting this gap fill, which would be this close, 271.73, and then you have another gap left behind, and that would be 276.22. So as long as this pattern can stay above really about 234, here's my key area for a closing basis. Since on a daily, if you came back down here, you already have a triple bottom. If you got a close back below 234.66, all that's off the table. But I would really be in bullish mode on Eli Lilly and Company long term, especially holding this key support area and rotating back up nicely. Really like the setup. Yeah, that's a very strong setup. And you have a really strong stock level. So that's something that everybody, if you're trading stocks and you're interested in something, at least in this rough market environment, that has a strong possibility of going up. Again, I can't, this is educational purposes only, can't give specific trading or investing advice. I would do your own research on this and consider this as a potential bullish play, especially with what is going on. Healthcare is still, especially with this little, again, ETF. Where is my healthcare? Now, where is that? There it is. Wrong click. So you see this healthcare, and this technically doesn't qualify on the weekly, but we do have a potential. It just squeaks in right at that on the daily. It's virtually there. That's why I'm interested in something with Eli Lilly too, because this has a potential bullish pattern in your healthcare Spider Select fund. So especially if this gets into full-blown bullish mode again, and then you can do a play in Lilly, really strong there. So you have a combination of a strong pattern on your stock, and you can have a potentially very strong pattern on the sector, which gives you a double whammy higher potentiality. Again, nothing's guaranteed. So why you use stops, always use stops, always manage your risk, because anything can happen in these markets. Hi, Rich. Yeah, I can go. Yes, no, there's a huge. Well, we'll take a look at that, Rich, in a second. How about the use of the 52-week highs and 52-week lows in your technical analysis? And again, do you use the NYSE or NASDAQ or both? Is this a measure of market health exhaustion? It depends on what cycle you are in. Again, at the beginning or in the middle of a major market, it's a sign of health with new highs. And in a bear market, in the beginning and the end, or in the middle, it's a sign of deteriorating health with new lows. Towards the end, it can be a contrary indicator once it gets to extremes. So at the end of a bear market against key levels, when everything's in the dumps and everything's making new lows, it can actually be a contrary indicator. On your trading view, Lilly did actually trigger. I'd have to check my other trading platform I always double check. I use this for live streaming. Thank you for that information. I use this for live streaming because I can separate my trading accounts, and if I'm doing analysis in this, I can still be trading in my trading account. So I'd have to check to see if that triggered. But that's one of the reasons I use TradingView, and a lot of people can follow along with me. So I always double check my price action. I was just going off what's in here, but thank you for that information, Christoph. So I will have to double check that. Then I'm going to wrap this up because I'll probably go live in another hour. So just keep an eye. That's why you should ring the bell. And you can always check in right around 5:05 Central Time to see if I'm going to do the open, and I probably will for everybody, just because I just want to try to help people. Yeah, this is a massive double top also, but we have to see something because one of the reasons let me just double check this. Again, it's a reversal pattern, and I have to make sure, and this, I mean, you can't use the third target. So this would keep me in mind now remember my next major target is about 20,000 area, but then below that I would use this 10,800, and then below that, if you did get that would be my major target then, because why? This resistance shelf becoming support. Why am I bearish longer term on crypto is because of until we get the stuff garbage flushed out with Tether and all the wash trading and all the stuff with Bitfinex and all that crap, it's the Wild West of trading that is super, super manipulated. And Tether with their attestations instead of audits because they simply move money around between Bitfinex and Tether, and all that is a huge house of cards that you could do your own research on that, but that's one of the reasons I am bearish longer term until it flushes out. With that, I think I'm going to wrap that up. Let me just see the rest of the comments. China February EV delivery numbers is coming. Expectations on guidance is for a decline month to month due to New Year's holidays. Thank you for that information, Abraham. And you can also bring that up again when we do the stock overview tomorrow afternoon at 4:30 Central. You can bring up that, and we can look at some of the other, if you want to look at XPeng and everything else, we can look at that in relation to those numbers. You are welcome, Options 22, and yes, I did that monthly chart. With that, I'm not seeing any other comments. Again, this has gone live for over an hour. Thank you, everyone. Thank you for being here. Thank you for attending. Remember, know where your stops are. If you're in doubt, go through your portfolio now before the futures open, and do your analysis to know where your key stops are, especially with this little bounce back rally. With that, I'm going to wrap it up, and shall talk to everyone later. Have a wonderful, restful evening. I got to go through my news feed again and see what new information has come out and do my final prep for the futures open. Oh, hold on. Can you talk about DBA big selling in the last two sessions? I'm looking for entry 2040 and look about right to you, or as a chart shifted and should be looking lower. Again, yeah, there's volatility. I'm looking for your major support. Again, you're at 2040. Let me just see here on the weekly. Yeah, anywhere in here, even all the way down to 20 bucks. Look at this prior resistance becoming support right at the bottom of the rotation zone. So anywhere down to there I think this will gap up tomorrow. But if it doesn't, anywhere in this weekly rotation zone is fine on a pullback. Here's a great little way, though we don't, there's a great little way to use reverse harmonics. So that's going backwards in time to that key level. You're sitting there at 2066 and you have 2053. So I'd be watching about 2040 to 2053 as your next support zone. And where would that put it in the weekly? That would put it look at that, right at the top of the weekly rotation zone. And my stop would have to be below that weekly rotation zone, okay? because that would have to break below this, and I do that on a closing basis, so I give it a little more room if you needed a daily stop, but that would be, you've got major support down here. So that's exactly the way to fine tune your levels. Again, we went from this major high 2 days ago back in time to the swing low on the 14th of February. Happy Valentine's Day. 2066, and look, we're pausing right there, but if it did pull back, that gives us our next key level, which lines up perfectly with the weekly. That's a great way to help you fine tune these levels. Now, on a move back up, you have this gap here, and that's going to be my first set of targets for any intraday move. And if you do get above that gap, that becomes support again, and I'd watch for a really quick run up back to those highs. You are welcome. Now, with that, I'm wrapping it up, and I'll talk to everyone later.